Hello and welcome to my channel. Alright, today I am going to give you an update on my investing journey. I created some new spreadsheets. Just a reminder, I am not a financial advisor. This is not financial advice, and this is just a case study of my investing journey, so results may vary. And I'm not a professional, so this is just, typical retail investor stuff. Anyway, this is my new portfolio page. I followed along with Dividendology. He has a great channel and shows you how to make these spreadsheets. So you can see my portfolio value. This is actually just calculating my dividend stocks and not anything else. And my dividend yield percent, annual dividend potentially. I should have an asterisk next to this. This is based on the last payout. And then my average monthly, also based on the last payout. And I said dividends, but I am invested in yield max funds, and those pay a distribution, not a dividend. And the difference is that dividends are, the extra earnings made by the company, whereas distributions, these are not actual companies. This is a fund, and they are invested in the underlying company, and they are making options trades on these funds, and they earn premium when they make a trade. And if it goes their way, they may even earn more money. So that is paid out to investors through distributions, which is taxed at ordinary income, versus dividends, which could be taxed at capital gains tax, which is lower. Okay, so over here you can see what I'm invested in. We have these safe dividend stocks, which I don't have as much of those, but I needed to balance out my portfolio because when I was only invested in yield max and when the market was down, oh boy, my account was scaring the crap out of me. So for a while I was just investing in things I felt like would stay safe and rise up. And you can see the trend lines here. These tend to go up and to the right. All the things go to the right, but the yield max funds can erode. Nvidia has stayed up, and Misty is actually not that bad. Their closing price on Friday, today is Sunday, their closing price on Friday was $22.80, and all of the yield max funds up until most recently have started out at $20. So anything over $20, that's my purchase price, obviously. So anything over $20 has stayed afloat. But you see, Coney, for one, has severely declined. Ulti has severely declined. Fortunately for Ulti, I bought in later. Tesla even reverse split, and I'm sorry I said that word out loud. I do not want to bring that to us, so we are not going to use that word ever again. We do not want that. We want to keep these prices above $10, preferably, and growing, maybe to 20 again. And they've changed their strategies with option spreads, which may allow them to appreciate a little bit. So that's good news. Anyway, I think I was going to go over the different formulas I have here in case anybody wants them. Of course, you probably know about the Google Finance formula, and there's a change to percent for the days change. Let's see. The spark lines. Most people know how to do a spark line, but just in case you don't, here's the formula. The dividend. This one, I had to search far and wide for a link that would work. So this Y charts link actually pulls the dividend or distribution. So if anybody needs that formula, there you go. Dividend yield is just dividing your market value, or I'm sorry, your yearly dividend income by your market value. Yearly dividend income is just multiplying the dividend times how many times a year. The yield max funds pay out monthly. The rest of the dividend stocks I'm invested in pay out quarterly. So times by 4 or times by 12, depending on the type of investment. And then this, wins and losses. So I have another investment tab for my personal wins and losses. This investment tab is my original, I'm still using. I have my amount invested, my total dividends so far, total taxes that I owe on the dividends, and I think this is pulling my options taxes too. Maybe not, I'll have to double check on that. My assets plus dividends. Okay, so when you add the total assets value, that's where that NAV erosion comes in. So you put 105 in and you get 81 out, but you also got paid 17,000. And then my total assets plus dividends plus options. I sell calls and puts. I'm trying to learn more options trades, but that's the only one that I'm confident that I understand. I understand how to sell a call and I understand how to sell a put. And I didn't know that that's actually called the wheel. So if you want to own the shares, what I do, I sell puts to get into the trade, which when you sell a put, that means you are agreeing to take the shares if it hits the strike price. And I usually pick one that's a little lower than wherever it's currently trading at. And when the expiration date comes, if it has hit that strike price, one, I got a good deal on the stock, and two, I got paid a premium to buy those stocks. It's a no-brainer. It's like, I can't even believe this is a thing. So then once I own the shares, I will sell calls on the shares, and that's where you are agreeing that you will sell your shares if it hits a strike price. And obviously when I'm selling the shares that I wanted to own in the first place, I pick a price that is above what I paid for it. A price where I would agree, yes, go ahead and take them, I'll take the money. So anyway, my net value is my assets minus my taxes, so 96,000. Okay, and then down here I have the declaration dates. I kind of put this in time order. So I have my declaration date column. I have my X date column. I had made this declaration date because YieldMax had combined their X date and payout date. So now they've broken it back out because they've changed their payment schedule. So this column is going forward going to be the X date. And then over here I have the payout date. And now I've gotten some criticism in real life. People have said, "Oh, you invested in it and it went down, so you lost." Well, I got news for you. It pays out every month forever. Okay, until I guess if something happens and they take it off the stock market. I don't foresee that happening in the next 5 years, or 10 years even. I don't know, but I mean, you can't predict the future, but most likely all these things will continue to pay out no matter what happens. So the biggest thing that I worry about is the R word. I'm not going to repeat again, because if that happens, what they do is they split the number of shares you have. So, and they want to have a new higher start price because of the risk of erosion. They want to have like a $50 start price. So say something got down to $10 and they decided to, I'm not going to say the R word again, but if they decided to do that, they would probably do a 5-to-1. So if you had 2,000 shares, they would probably divide it by 5 and leave you with 4 shares now, 400 shares. And while it would still pay out the same, around the same range between, 2.7 and $1, it would be for far fewer shares. That's why I don't want to even think about that. And I like that they changed their strategy. I feel like we're due for a comeback, especially with this one. This is my biggest hiccup in my account because it's the one that has the most shares, it costs the most, and its current value has significantly declined for me. Again, this is just a case study. Everybody's different, and don't expect the same results. Nobody's going to have the same results unless they invested at the exact same time with the exact same number of shares. So anyway, so I went over declaration date. If you haven't seen my other videos, this is how much I've paid for this many shares. This is the current market value. This is how much I've made in dividends. And this is the market value plus the dividends. So going back to my portfolio page, you can see Tesla is a win. And that is because on my income tab, it is green because I made enough in dividends that the total surpasses the amount that I paid. So if in March you had bought 10 shares of Tesla, even though the price back then was about $17, you would have made $56 in dividends, which would have averaged it out. And from now on, I mean, assuming that the share price does not severely decline, I'm in the green from now on, unless I buy more shares, and then there's some flexibility. When you buy more shares, it can go up or down. Like NVIDIA was in the green for me, and then I bought more shares, and then of course it went down. So right now, I've paid 10,000. I've made 856. The market value is 9,000, and if you add the market value plus the dividends I was paid, it's just slightly under 10,000. It's at 10,580, and I paid 10,591 since the last payout. Which, if we come over here, the last NVIDIA payout was here, 99. And so ignore these numbers. These are just my estimates. The ARCC estimate is probably right. They have been paying 48 cents every quarter for a while now. SCHD I had to estimate because they pay a random amount that comes out to approximately 4% a year. Now remember, they pay a lot less, they cost a lot more, but their trend line is up. That means that their value will be more in the future most of the time. I mean, anything can happen. The future's not guaranteed. But historically, these have trended upward, so they are typically considered a safe bet. But past performance does not equal future performance, so don't get it confused. Anyway, I have here the current or closing price on Friday. Today is Sunday. The market's not open. It will open on Robinhood tonight at 8 p.m. But Google Sheets does not update until the standard market hours, which is 9:30 to 4 p.m. Dividend totals. This is what I've been paid so far. I got this formula from ChatGPT. Thank you. So it's only adding up from today prior, so that I'm not including these estimates, just in case, they are wishful thinking. They are not necessarily true. Obviously, Visti has not paid out $5 before, but look, their first payment, hello, it was over $4. And this next payment is delayed since they started this new payment schedule. We have more than a month in between the last payment. I know you can do it. Come on, Jay, you got this. So, yeah, I think it's possible. I like to dream. Anyway, these are the payments I've received so far. These are the payout dates. And then over here, I'm calculating my taxes. I would love to leave all the money that I make in Robinhood because I most recently got Robinhood Gold, and they are paying 5.5% interest for 60 days, which is a great interest rate for any cash or dividends that you have in the account. But I am taking my tax money out. I like to use Wealthfront. I have buckets in Wealthfront. They're like a savings account. It's considered a cash account because they also have a robo-investor. I also use the robo-investor. It was doing great, but in the last couple of years, I'm not impressed. Anyway, so I have a taxes bucket over there where I'm moving this money to and just holding it to make sure that I have enough to pay my taxes. I'm just scared if I leave it in my Robinhood account that I might use it to buy more stock, and then I'll be in a situation where I'll have to either sell the stock or, well, that would be it. I would have to sell the stock, and then I'd owe taxes if it appreciated. So it's crazy how much taxes we pay. Anyway. That's that column. I'm putting away 10% to savings, and then the remainder. I had buy assets on here, but now I should change that back to buy assets. But I do spend some money on necessities. Anyway, I don't have a very good fancy chart for my sell puts or sell calls. I keep it pretty simple. These are the dates, these are what I did, and when you sell a put, so it has to go down to the strike price. So for this last payout, or did it have to go up to the strike price? Now I'm confusing myself. I can't remember. This is why I only sell puts and sell calls, because my brain just does not stay focused. All right, I'm not going to talk about options because I don't know enough about options to talk about options. But I can talk about this one. So on August 27th, someone out there bought my sell call, agreeing to buy Coney at $17 if it reached $17. And let's see where Coney's at, $12.98. Oh, sorry. I just got to keep $21. Yeah, that was nice. That was nice. I like that. Okay. Well, this is my portfolio now. I hope you enjoyed the show.